Okay, in celebration of the recent International Coffee Day, yes, that's a thing, I thought I'd do a video on the coffee market. We're going to cover a few things. We're going to cover, well, what the market's been doing lately and why it's been gathering some attention the last year or so, a bit of crazy action in the market. We'll look at also the coffee market itself, learn a few things there, and also learn about the contracts that we actually trade, the futures market in coffee. Then I'm going to show you a couple of trading ideas. We'll talk a little bit about some options and a little bit more about the spread market for coffee. And I will finish up with the next steps, a few things you can do should you be interested in learning more about this market. So it should be fun. Get your coffee and settle in. Let's go. All right, first up, if you are listening to this as a podcast, which most of you are because I have more podcast listeners than YouTube listeners, then we will be looking at some charts in this video, but I'll put a link below so you can see them, but I'll also try and talk through them. So you're not going to miss much, if anything at all. So don't worry about that. So let's get started. What are we looking at today? We're going to look at why the market has been a little bit hyped, a little bit crazy in the last year or so. The coffee has essentially doubled in the last year, which is like crazy to think of. If you've actually, before I read some recent headlines, which will be interesting, I want to show you just a couple of little quotes. One is from this book here, A Trader's First Book on Commodities. It's by Garner. Fantastic book. I'll talk about it towards the end too. But a fantastic book for anything commodities and anything trading, and a must-have for your library, but I'll come back to that. But I want to quote what Carly says. She's written a few, there's not much on coffee, but there's something that I thought was really bang on. And I'm just going to read it out. Coffee futures are prone to rally during the spring months because of freeze threats in Brazil. However, a freeze occurs once every 5 years or so. So that's very typical of the coffee market. It can kind of go from this lull, sleepiness to a big wake up because of weather-related stuff. And about 5 years or so is about right. So, but let's read some recent news. This is from AP. Came out in the news last week, or was written last week. A sustained drought followed by 2 July frosts blew a hole in Brazil's coffee output, immediately sending wholesale prices higher. The frost will significantly affect the 22-23 harvest. Now, isn't that exactly what Carly just said a second ago? Like, from a printed book to exactly what's happening in the news right now. I think that's freaking fantastic. Another an analyst from StoneX, these guys produce some great stuff. He wrote, we've never been dealing with a supply and demand issue on top of a logistics issue, on top of labor issues, on top of a global pandemic. Now, you could say that for a lot of markets at the moment, but it's particularly relevant for coffee, and that's what's seen this market essentially double in the last year or so, but also do it in a way that's not a straight line. It's not a kind of cryptocurrency move. It's been a crazy move, which to me, when I look at it, let's go back to the market here, get that out of the way, make me a bit smaller too so we can see what's going on. When I look at it, that to me says there's a heck of a lot of opportunity both for options and for future spreads, which I will look at in the next section if you like. But yeah, it all adds, all of that stuff, the news and both the price dynamics just add up to some great trading opportunities. So what are we doing next? Let's talk about coffee market. Okay, so coffee, a couple of little fun facts. I believe its origins are in Ethiopia, where they first discovered a little cherry, and if you remove the stuff around the cherry, it has the raw bean, the green bean, which someone figured out that if you roast it, grind it, and put it in hot water, drinking that hot water actually tastes nice and wakes you up. And is a nice way to start the day. Coffee basics. There are 60 different types of coffee grown or that can be grown around the world. Only two are at an industrial level. One is called Robusta and one is called Arabica. So if you're buying coffee bags at the supermarket, particularly coffee beans, you'll see that it generally says it's a blend of Arabica from here, there, and everywhere. Robusta is the bean that creates instant coffee, the stuff that sits in your shelf. That's how I remember it. It's robust. It sits in your back of your shelf forever. And it's fine for when you run out of the coffee beans. Now, the stuff that makes espresso is called Arabica. Arabica accounts for about 70% of the world production. Robusta is about 30%. As I said, they're the two types that essentially make up all industrial grade production. Origins, Brazil accounts for about 35% of all production. The next in the list is Vietnam, which accounts for about 18%, Colombia about 8%. There are others like Guatemala, Ecuador, Papua New Guinea, Ethiopia, of course. They're all in the 1, 2, 3% range to make up global production. As for the futures market, the market that we actually trade, there are several contracts for coffee. There's one main contract which I'll get to last, but there are several contracts. As you can see on the screen here, I've got 4 different prices. They're all similar, but they're not quite the same, are they? There's one traded out of Singapore, one Tokyo, one Brazil. There's on the screen here, top left. Let me see if I can make that bigger. There we go. That one. This is what we call the New York contract. What it used to be called the NIBOT contract. It's now traded on the exchange called the Intercontinental Exchange, ICE. So yeah, it's called iced coffee, but it used to be called the NIBOT, NYBOT, New York Board of Trade, which I've got a little clip of. It's gone away. There we go. For those of you listening, not watching, there's a clip of Trading Places there. Trading Places, just a little tangent. Trading Places was filmed on the old floor of the New York Board of Trade, which was underneath the World Trade Center many years ago. And moved before 9/11, but those trading scenes were filmed with real traders in the background. They were brought in on the weekend to be extras and to pretend to be yelling and screaming and doing that, which the great way they used to trade futures. They don't anymore. Obviously, it's all electronic. But that was filmed in the orange juice pit, which was, I believe, right next door or a couple over from the coffee pit. So there you go. In terms of, I'll get rid of those. There we go. In terms of the coffee specs itself, it is a big contract. Each futures contract on the ICE contract, that is, it accounts for 37,500 pounds of coffee, and so that works out. If you're looking on the chart here, a move from 191 to 192 is 1 cent, and that works out to be 375. Now that's a heck of a lot. Generally. Last night had a range of 8 cents, so that's a huge move. On average at the moment, your average true range reads about, let me just find that, reads about 5 or 6 at the moment. So on a daily basis, there we go, it's a bang on 6. So bang on that's a little over $2,000 range per day per contract. That's a volatile contract. I first traded coffee back in the 90s. And it was a wild and crazy market then. We used to trade a lot coffee versus cocoa, or just trade them both independently, but they fall into the same category of just a potentially crazy market to trade. They're very much weather driven. So weather, obviously in Brazil, it accounts for a third of the production. So things like weather in Brazil, weather in all of those equatorial countries, can be, weather around those regions can be volatile. Therefore, coffee prices can be volatile. It can affect planting, it can affect harvest, but it also, as that StoneX analyst said, it can affect logistics and all of that as well. So that's what you see a lot of this volatility in the coffee market creates. And as I said, this is what creates the opportunity to trading things like options and to trading things like spreads. It also creates the large amount of risk in trading the outrights, but it creates different trading ideas in those other strategies. So I'll get to that in a second. For the futures, for this particular futures, the New York contract, sorry, I still call it the New York contract. It trades 5 expiry months per year, March, May, July, September, and December. So you tend to find the first couple of contracts are liquid and the back ones aren't even listed yet. In terms of what moves the market, well, I already said data and all of that kind of stuff. You'll be able to get your data from the USDA do produce a report. It's not as influential as, say, the USDA reports for grains. You also get data from a place called the ICO, International Coffee Organization, out of London, and there's also a lot of data coming out of Brazil. Generally speaking, the data is thought to be less reliable as it is in other markets, and that creates the volatility too. So it's probably a bit more tricky for a true fundamental analyst to kind of cover the market unless they really dig deep and know what they're doing, because there can often be some false data coming out. So I read. I don't know personally, but so I read that. But certainly when you look at a chart, it certainly looks like that, doesn't it? I mean, just that top left chart, just that New York contract certainly looks like that's what happens in the market. So what's up next? Let's talk about a couple of trades. All right. So as I mentioned before, trading outrights can be risky. So at $375 per cent, that's an expensive contract to trade. It's fine if you have a big account and you can put just a little bit in there. You can keep your stops relatively wide and afford to do that. But there are better ways of doing it. As I said before, one option is options. When I look at this market, I used to be a professional options trader myself. I'm not now, but after a while, it teaches you to be able to quickly eyeball a market and see, okay, well, here are the potential trades. So with something like this market, if you think of it, it's in a way a little bit like the VIX. The way this market can behave, it can go from slumber to explosive and back to slumber again, which is what the VIX can do. It can sit at 15 to 20 range and then break out, and then that's the nature of stock market volatility, which is what the VIX is. And that's the nature of these, explosive markets, the coffee and the cocoa, and we'll do cocoa in another video. So as an options trader, you can say, well, short, just simple short call, short put strategies are probably in the more idiotic end of the spectrum. Something you tend to, if you're going to do, you don't do very often, or if at all, to be honest with you. It's a market that looks like it will pay off patience in trading from options from the long side, long deltas. Also strategies like, if I look at this market right now, what we've got is market's gone from, I love looking at the average true range. I'll just expand that on the screen. So that the average true range, let's say that is it's not going to be it's a measure of volatility. So instead of looking at, say, implied volatility averages or historical volatility, we can look at an average true range and just estimate, how options prices would look. So the market's gone from, say, a few months ago, trading low volatility, trading extreme high volatility 2 months ago, and then back again down to slightly higher than average volatility. When I look at a market like that, I think, well, the trades to make would be something like being long calls and being, have some credit puts in there, that type of thing. The market doesn't look like it's going to take a huge dump at any time soon. There are, as we said before, some fundamental issues holding this market up. So you could do something like sell a credit put spread and have that pay for a long call position to a certain degree. Something like that, and maybe trade even in the diagonal in the first month and the second month expiry. For those of you that have traded options, you kind of know what I'm getting at. So with options, you would avoid the outright short positions. A lot of brokers will stop you from doing that anyway. But even so, common sense should stop you from doing it. And then in terms of being long, you want to be trading from the lower volatility, which is kind of where it is now. It's not super low volatility. It's that kind of low to moderate volatility, which is a great place to trade these volatility strategies, because it shows there is a degree of uncertainty in the market, but there's also more potential in the market in terms of vol, if that makes sense. In terms of spreads, I intimated before that this market is a great one for trading spreads. I think it is. It is very much a seasonally driven market. I have a little chart here for us. A little bit blurry, I beg your pardon, but this shows the seasonal trend of outright coffee over the course of any particular year. It shows a 5-year and a 15-year average, and you can see there's periods where there's definite trends. I like looking at the 15-year average. It gives you obviously a better average, and I look for the 5-year contract to show us more of a confirmation, I guess, if you like. So you can see there's periods, from September to October where the markets can be potentially bearish. There's a bit of a bit of uncertainty over the following few months, and then there's a bit of bullishness into the end of the year and the start of next year, and then a bit more uncertainty. So it goes from phases of bullish, bearish, uncertain, bullish, bearish, uncertain, and so on. And to me, that's a nice looking seasonal chart. And from there, we can build strategies. Here's one I prepared earlier, as they say. This again shows the 5 and 15-year. If this is all alien to you, by the way, I'll explain it in the end. But this is a 5-year and a 15-year trend. You can see that there's a definite trend. This is where we're starting to look at spreads. So in this particular instance, we're looking at March versus July. And on average, it shows the last 15 years. If we were to be selling this spread, selling the March, buying the July, on average, it makes profit 100% of the time. It has done in the last 15 years. And it makes a decent amount of profit too. That it would be entering a strategy at the start of, or the middle of September, and exiting in November, even as late out as early January. I like the look of this spread. To me, it ticks all the boxes for a particular looking spread. I'm not saying you should go and enter spreads or anything like that, but I'm just showing this is one particular way we might look at the market, if you like. It's as I said, it's a very seasonal type. But let me get rid of that screen there. It's a very seasonal market, and that is it has distinct, not necessarily direction, but volatility during certain parts of the year. Obviously, when weather is affecting crops. Okay, so it's if you've traded the grains, you know what I'm talking about. Even if you trade energy markets, you know what I'm talking about. How weather can affect the market at certain times of the year more than the others. So very much so in these equatorial crops, coffee, for example. So that creates some great trading opportunities, but you have to know exactly what you're kind of looking for, which gets us on to the next thing. Nice little graphic, things to do next. I've got 5 little things for you to do next. First up, if you're interested in trading a market like this, or any commodity market like this, you need to learn about spreads. And that's what we do at the MasterClassTrader.com advanced spread course. We look at how to go about analyzing these spreads, finding data like I just showed you then, where to find that data, and then how to pull it apart and make sense of it and turn it into a trade. So take what might be a vague idea, backed up by a little bit of data, dig deeper, and turn it into a trade. That's the idea of what we do at the advanced spread course. If you check it out, it's masterclasstrader.com, and there's a special there at the moment. I think it's 20% off if you use the code trading with GB, but look for the button at the top that says specials, because that'll show you the specials. We also have a spread group. I'll have details of that below, where a few of us who have done these courses talk about these spreads and talk through them, and find different spreads find different trades for each other, and talk through them and say, no, that one's good, that one's rubbish. And it's all good people Really enjoy going through different ideas, different trading ideas with people kind of new to the market. There's no silly questions or anything like that. It's a good group of people. So that's something to check out as well. The link is below. Get the data is number 3, I think, is the next thing to do. I'm using, these screens are on TradingView. You can get the data from anywhere. I would suggest doing this if you're interested in learning about the market. Don't pick one, pick 2 markets and follow them. There's an example here that to me as a spread trader kind of just jumps out straight away. And that is trading the iced coffee. As I said, this is one on the top left. And down on the bottom right, I've got the euro-based Robusta. So the New York contract is Arabica, and there's a Robusta contract as well. And you can see here, it's really interesting stuff. So take a look at the top one. Markets rallied, had that peak volatility come back and kind of settled into a bit of a range, not quite a nice triangle, but kind of getting there a little bit, you know. Whereas this Robusta contract has continued on its merry way higher and made new highs and so on. A little task for you to do is go and find out why. Why is that happening? My guess is that it's geography related, weather related, could be. But the way to learn about a market is to take on one project and learn about it. And here's a project for you. Find out why Robusta is trading differently from Arabica at the moment. And email me. Also, get the books. Now, I mentioned before Carly Garner's book called A Trader's First Book on Commodities. It's fantastic. I think it's one of the best books written for a very long time. And it's cheap as chips. She should charge a heck of a lot more for it, but because it's very thorough and it's very well thought out, very well researched. I think it's a must-have if you're getting into this world of commodity trading futures, any of that. She has 3 books. One's over here, Trading Commodity Options. The other one is, for some reason, on the floor. Higher probability commodity trading, but this first one is the one to start with. Get all 3, I think $20 each. Fantastic resource, fantastic. The other thing to get is, for some reason I can't find my 2021 version, but this is the 2020. It's called the Commodity. Can you see that? Yeah, Commodity Trading Guide from Hightower. This is must-have if you're getting into commodities. I've bought every year's one. I think, I don't know where the 2021's gone, but each page is dedicated to, there you go, I opened it up right at coffee. Each page is dedicated to a particular market, has charts like production, exports, all of that kind of stuff, price charts, and a little write-up on each market. It's a great place if you're looking at a new market. As a futures trader, you often kind of jump from one market to the other, or you can do. I have. It's a great resource to just say, okay, well, this is what wheat's doing. This is what lean hogs are doing. It's an annual thing. And right now, I think if you buy it, you get $5 off. It's at the Hightower. If you look up Hightower Report or Hightower Commodity Trading Guide, it's $20. Otherwise, $5 if you buy the early edition. And it's a must-have. Every year, you must have that. Things to do, number 5. Contact me if you've got a question or a trading idea, or you do look up Robusta versus Arabica and have some ideas on why it's trading differently. Contact me, have a chat. I'm always happy to have a chat about the markets. I don't do, if you're looking at the YouTube video, I don't do comments below because I don't want to. But certainly head over to one of my, there'll be a link below to one of my websites, and you can contact me through there, and I'll be happy to hear from you and have a chat about copy trading or commodity trading, generally spread trading, options, whatever you want to talk about. Once I start, sometimes I just can't stop. It's probably the coffee in me. Anyway, go and have a nice coffee and trade well.